evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for November 13th, 2018. And we once again have our focus on the financials and support levels and what happens if these levels don't hold. We'll take a look at these leading financial companies and, of course, the S&P for our game plan for the remainder of the week, specifically, again, focused on financials. We're going to start with the XLF, which is our popular ETF that we track on a daily basis or have positions on departures and swings toward and away from key levels. Mainly, we've been looking at these pivot points at 28.50, 27.50, 26.50, and then the reversal low in October off of 25 per share, again in the XLF broader ETF. The most recent movement in the S&P from gravity spot to gravity spot has taken the XLF from 27.50 to where we're going to close today's session and bounce, it looks like, at 26.50 per share. What's the plan? Given this key support level, we're going to look for any type of bounce behavior, but like we had in technology last Thursday's video, whatever the market does, hold its support and bounce, break through support and fail, probably the XLF will do as well. So keep a close eye on the financials with the S&P or the Nasdaq and other equity indexes. But as we look at these, keep in mind 2650 and these spots. Volume, to an extent, if we zoom in on it, has declined on the rally, which gave us a sell swing bear flag that was from last week into our resistance pocket, and we see a movement lower. What happens now? It's a bullish day. So on this chart, we saw a volume divergence. That's what gave us our thought process of a sell swing last week, and that is complete to the lower target. Of course, what happens next, we aren't going to predict, but plan. So given these low sell or low volume days, and today being a green bullish volume day, we do think the dominant thesis is going to be for some type of support hold and bounce up away from this level with our eyes focused on 27.50, and if we can get above that, 28.50. Let's take a look at that in the context of individual financial companies. Now, there's a little bit something different with Goldman Sachs. It's a news event, and it was hit with fines and legal action. So we saw a plunge in Goldman Sachs shares. Sure, that weighed down the broader financial ETF, but we'll see how the other stocks in the financial sector, or at least our leading stocks, are situated into support levels. But keep in mind, if you're playing options or anything else on Goldman Sachs, it's going to be affected by a news event that other financial companies won't have to address. So keep that in mind with premium and other plays. Goldman is playing off of the 200 per share level, which is a little bit lower than we might have expected. Nonetheless, its upper spot is about 227, 219, and of course 200. We do again see high sell volume, weak bull volume. That gave us a short sell, but this is again news related. That's not the case in the others like Bank of America. We'll go ahead and draw a live update, which is going to be 27.60 off almost 27.75 per share. That's going to be our spot marker pivot. And again, we have the context of the spike reversal off of 26 per share all the way to 29 and what happens next. The thought process will be the same. Going to look for a dominant thesis bull bounce, but if that fails to happen soon this week or into early next week, we'll look for a downside play to test out 26 per share. At the moment, that will be defined as the alternate thesis, and that can give us a bigger move to the downside. The last time we had that happen was on the failure to bounce outcome off of 27.50. So same thing, expectation for a bounce. Now the little caution factor here, which are sell volume rapidly increasing. So the thought process for a swing trade is that we would prefer to go long into support when we have weaker bearish volume. If we see price slam into a support level, and it does so on very high bearish volume, the odds do favor a breakdown. And that is what happened eventually with Bank of America. Now, We're seeing the same thing with relatively weaker bear volume and a pickup today, at least, in bull volume. JP Morgan is actually well off its lows. We have a couple of trades we had in this one, and we're following into our support levels at the midpoint of the range. Keep in mind, other financials are at lower positions. JP Morgan is thus showing relative strength. Its pivot is going to be about 109, 110 per share. On the bigger picture, we again see 102, 106, and all the way up to about 118. Given we're at the midpoint, if this holds, it will do so off of 109. That is a price level trend line and the 20-day exponential average. Once again, the thought process for the big picture and the plan is whatever these financials do and the market does, they'll do them together. And that will be our positions on a departure on the intraday chart or any type of option position. Citigroup is weaker. It is into about 64 per share on a successful bear flag. Into the moving averages, into resistance at 68. And this is what we want to see if we want to play against resistance levels. This is a concept of weaker volume on the way to resistance, weaker bear volume, or weaker bull volume in this case, and then stronger bear volume. This picture is not quite as clear as other financial stocks. Nonetheless, we're going to be watching 64 per share for any type of support bounce and rally, maybe to 68 or at least through this prior chop. We'll look at Wells Fargo, which also has a weaker position. Notice that the 50 per share level is the reversal low, 54 per share is the high, and we are chopping between those levels. Probably want to look at other positions, other stocks we mentioned, not Wells Fargo. We'll finish up with Morgan Stanley, which again is at the lows. So notice that even in the ones we selected to look at for tonight's video, some are stronger, like JP Morgan, and others are weaker. Morgan Stanley being one of them, which is at the prior lows. 43 per share, 44 per share, and the upper spot, if we get a bounce, is about $46.80 or even $47. What happens if these levels fall? Well, you'll probably see downside action, and we can put that in the context of the S&P itself. So keep in mind the financial sector, XLF, individual candidates, and we do have a gravity spot still in play. That's 2731. Any type of upside bounce takes us back to 2811. And if we start to see falterings, failing, and sell swings, that's going to take us first to 2700, then to 2682. And maybe beneath that if this bear volume picks up. But for now, we'll end up with, once again, a perspective on the financial sector, XLF, the support into 2650, and a little interplay between these levels. Take care. This is Corey Rosenblum with your Theo Nightly video for November 13, 2018.